What's up, my people? This is Top Boy Empowering FX. Today I'll be taking you through liquidity concepts. I'll be teaching you how you can trade you can trade using liquidity, and how you can avoid to be liquidated in the market, whereby knowing where exactly you're supposed to put your stop losses and where exactly you're supposed to enter the market using liquidity as a strategy. So I've taught many people how to trade, and I think I take liquidity as a very serious thing. When I'm teaching my students, I tell them that if you cannot see liquidity, you are the liquidity. So it is something that you have to learn from your mentor, teach you these concepts, know the different types of liquidity, know where to spot the liquidity is the most important. If you can't spot that liquidity, man, bro, you are the liquidity. So I will come into our Empire One FX YouTube channel. This is the official channel. So in case you're a new person, you can subscribe, you can share our videos, you can comment, you can leave us a like for the support. I'll be linking our Telegram channel and our free WhatsApp channel here in the video description below. So please don't fail to check in and join those ones so that you don't miss out on some of the weekly outlooks, some of the important information I do make, some books I make and send there, analysis, data analysis, weekly outlooks. Every weekend I send there weekly outlooks so that you can learn from my setups, and it has helped very many people. So please join and don't miss out on that chance. So today, the main thing, like I told you, we are going to be looking at liquidity, and liquidity is a concept that very many traders have skipped in the market. So what is liquidity? That's one of the most and important questions you can ask me. You know, many traders know liquidity as these are areas where retail traders place their stop losses, which is okay and which is correct. But I created some small work for you, some small PDF here. So let me just take you through it very fast. Then we shall go back to the live chat as we spot out the liquidity and see how best can we trade the liquidity. So what is liquidity? So I started by saying in any financial market, for every buyer there is a seller, and for every winner there is a loser. So you cannot buy what they're not selling, okay, and you cannot sell when there is no one who's going to buy what you're selling. So you have to buy and sell. So liquidity, in short, it is money you're hearing, the money you put on your accounts. That's the liquidity in the market. Altogether, the moment you place a trade like this, your money has now been entered into the market. So you're buying or selling a certain currency against the other. That's liquidity. So liquidity is the money we see in the market, the money we put in the market, the money we deposit on our accounts to trade. That's the liquidity. So that's the money we are going to be using to buy and sell. And remember that every time you lose, there is a win, and every time you win, there is a loser. So every time you lose a trade, you are adding liquidity to the what? To the market. So every time now when your stop loss is hit, you have added money in the market. Even sometimes traders don't put stop losses, they just go full margin and end up blowing their accounts, trying to flip accounts. So they are creating more liquidity in the market, which is good. So as we continue here, so you have most likely heard the term stop hunt or a fake out. So what is a fake out? What is a stop hunt and what is a fake out? These are areas in the market. For example, let me say these areas of support and resistance. So we have what they call breakout traders who wait for a breakout, maybe from an area of support or resistance. So when they break out and then retest those such kind of concept, I think I used to use that one sometime back. That is in 2021, but now I've resorted to learning these new concepts, the ICT and SMC. That's my strategy. I combine the two to come up with one. So a fake out, a stop hunt, we shall be looking at it more likely. So which refers to the price violating a protective stop loss and then moving to the traders intended direction afterwards. That one has happened. Even I think today it happened to me when I was taking out a buy on gold. I think I didn't spot the liquidity, but though it had confirmed with everything with me here to enter the market, though they just liquidated with the small pips where I put my stop loss. I think that's why they had to liquidate, but it's okay and it's normal. The market has to do that every single day. So stopping me out is not a problem, but is just moving on and looking for other trades. So it is everywhere. If I've never hit your stop loss, then I don't know if you're a trader. So every trader has faced that. No matter how good your setup is, it can be violated at any time. So after your stop loss has been hit, you see the market move in the intended direction. You anticipate it to move. Now, this occurs because the institutional money requires liquidity in the market to place large orders. So they cannot, the big institution, the BFIs, they cannot place trades without stopping us out with the retail traders, the smart money concept traders. If they don't take you out, they don't get money. So they don't have that enough liquidity in the market to move it in their desired direction after they have made those fake moves to fake out people to buy, sell certain currencies or commodities or anything in the market, in the financial market. So this occurs, like I've told you. So common areas of liquidity are likely to be purged. Sometimes what is purging? It's like cutting through, okay? Grabbing the liquidity, although stopping out the stop hands, the turtle soups, that one is more of the purging. When I talk about the word purged, okay? So it is violating. It's more something to do violation or violating some of our stop losses, whereby they have to come liquidate, then the market moves in the direction. So that is purging. So what are they purging? They normally take out the trend lines. Sometimes they take out the highs, all lows, maybe highs or highs of the day, the high of the day, the low of the day. They can be taken out, or the highs and lows of the market structure. So all that one is more of liquidity. So there we are defining much of or understanding what is liquidity. So we still move looking at our small PDF I came up with. Hope right now maybe you're getting or to understand what is liquidity. So let me just again bring it back, as I first told you in the first introduction about the liquidity. These are areas where retail traders intend to put, or where they put their stop losses, okay? So it can either be on the buy side, or it can be on the sell side, okay? By placing the buy stops on the buy side or placing the sell stops on the sell side. So in doing that, they are basically trying to, maybe they're trying to sell or buy a currency, okay? So what happens is they purge through, they cut through these stop losses, they stop them out, they grab the liquidity, they take out that money, then the market again moves in the intended direction. That is liquidity in short, okay? So training your eyes to spot where liquidity, where the price is most likely to purge. Liquidity is a necessary part of the trading strategy, of this trading strategy. So what I want to tell you is that if you don't know exactly where the next liquidity or your next draw on liquidity is, I can't explain this, then you don't know, or what you're trading, you don't know what is liquidity itself, okay? So you as a trader, you know where are we going to purge next. Look at these areas in the market, look at these equal highs, look at these equal lows, look at the trend lines, look at those areas whereby you see the market, or the big or the institutions are likely to come, liquidate, take out the retail traders, then move in the market in the intended direction, on the direction you intend that it is going, where the market is going to move. Sorry. So if you train yourself or train your eyes to spot, as I'm going to be taking you through that, it's a small thing. So train your eyes to spot where price is mostly to purge, is a necessary part of this trading strategy, especially when trading trend reversal opportunities. Like I told you in first, that we are going to be looking at the trend reversal opportunities. This one normally happens, for example, every time we take out, let me say we have our market structure which is bullish, and so every time we take out a higher high, what happens, we have a reversal. So we have taken out a higher high, which is external range liquidity, as I'm going to be taking you through liquidity in depth. So it's external range liquidity. So when you take out that, you expect a reversal inside, come and look for the internal range, which is maybe a fair value gap, then which is going to push or hold the price, pushing it higher or repricing it higher. That is something also I'll be taking you through this. So it may be a lengthy one, but please, I wish you watch the whole of it to understand this concept very well. So the best way to avoid being liquidated is to identify where liquidity has already been purged prior to entering your trade or your current directional bias, and will help you to avoid the unnecessary losses. This confirms, sorry, let me remove this. The unnecessary losses. So the market needs to generate liquidity in order to move up or down. If liquidity isn't already there, then it will be what? It will be created. So sometimes we don't see liquidity, but the big banks or the institutions, they first create that liquidity, entice these early sellers or early buyers to enter the market. Then later they come and cut through their stop losses or grab their liquidity, then move the market in the intended what direction. So our retail basics are like support and resistance, double tops, double bottoms, and the trend lines. These are the most likely generating liquidity to the markets. So we expect the price to be manipulated at around these areas. So where you see support and resistance, where you see a trend line, just know that there are people who have already placed or who have been trained that you are supposed to put your stop losses maybe at this point, and in that they are putting liquidity in the market. Okay, so we are going to be looking at that on the live chat. So we are going to be looking at the different types of liquidity, which I'm going to be explaining one by one as I spot one by one in the market, for you to know that this is our trend line, this is our range liquidity, whereby the range liquidity is going to be looking at the support and resistance liquidity. The range liquidity is going to be looking at support and resistance. So we have the equal lows and equal highs. This one is basically going to be looking at the double tops and double bottoms in most cases. So we have what they call the older highs and old lows. So these ones we shall be looking at, basically looking at maybe our higher time frame structure. Let me say we have our high, for example, if we are bearish, we have our highest point, which is our lower high, the lowest point is our lower low. So those 2 points, those 2 swing points act as our external range, which are looking basically at the old high and old low, looking at higher time frame. So we have what they call the time-based liquidity. The time-based liquidity is going to be basically looking at the session liquidity, looking at the previous daily highs, previous daily lows, previous weekly highs, previous monthly highs. I'm going to be taking you through the time-based. So me personally, I'm trading you basing on the time-based liquidity. For example, today we took out a trade on Euro USD using the session liquidity, whereby we are looking at the Asian highs and Asian lows as our liquidity. So when we take out the Asian highs, what do you anticipate price to come and take out the lows? So that is in most cases that's our take profit. I'm going to take you through that trade if time allows, and see how we took out the Euro USD trade using the session liquidity. So we shall be looking at the previous daily highs, lows, and the monthly highs, weekly highs. That is the time-based liquidity, and this is what I want us to be look out. When I reach here, I'll take much time because this is what most traders are using. Those ones who are trading ICT concepts, that because they are basically looking at the time-based liquidity for their entries and targets, maybe their objectives when they are trading. So let us look at this small chart I drew for you here. This one is just looking at the equal highs, as you can see here. It's looking at the equal highs, equal lows, looking at the buy side liquidity, looking at the sell side liquidity, looking at the trend line liquidity, looking at the equal lows. Let me just go to the live chart, help you out to identify this liquidity and how best can we trade this concept. How best can we trade this concept, the liquidity concept? So as we talked about liquidity, and like we have looked at the different types of liquidity. We have said liquidity, we have what they call the equal highs. This is how the equal highs look. Okay, so these are equal highs and equal lows. For example, these are equal highs and these are equal lows. Okay, now in this scenario, equal highs. So let me just put each, let me put a text. Excuse me. We have equal highs, Let me make a duplicate of this, sorry. What is going on here? Okay. Okay, so these are equal lows. Okay. I'm pressing the wrong button here. I'm pressing the wrong button for. Okay, these are equal lows. So that's how our equal highs and equal lows look. So we are going to be spotting this type of liquidity or these types of liquidity in the market. So those are equal highs and equal lows. So in case you spot such kind of areas in the market, so basically this is something I want to talk about. So when you spot the equal highs, these ones present the buy side liquidity, and the equal lows represent the sell side liquidity. So every time we enter the market, or maybe they can represent the buy stops, this one represent the sell what? The sell stops. So how would these retail traders tend to put their stop losses? They might tend to put them above here. Then, for example, we are selling, then they put their stop losses above here. Maybe we are not even selling, we are buying. They will put the stop losses there. Then what happens? They come and clean them out there. So what are we looking at? At this, we are looking at liquidity, and this is how the market was supposed to. Maybe it was bullish, so they came and swept them out. So that means that they took them out. So sometimes it's not even taking them out, they will sweep this one, then the market sometimes comes back, moves down, so it is hurting. So when they take out your stop loss in this format, so that's how the market, the institution or the market makers do it every single day. So that's another type of liquidity. So we have what they call the support and resistance areas. It can also be looked at in form of this form. It is also in form of equal highs, or it's arranging liquidity. Okay, so the ranging liquidity is going to be looking at this. So here basically we are going to be looking at these areas of, this is an area of resistance, and this is an area of support down here. So I will tend to see support down here. So this down here is an area of support. So we are seeing this on the ranging liquidity. So many people would like to come and do what? Put their stop losses above here. Maybe if the market is selling, what happens? What they do is, maybe these people entered early in the move, okay, because they were induced, because they have seen the double tops and double bottoms, so being created there. So they entered early. So what happened? The market makers had to first take them out, then moved it in the intended what direction. That's how best we are going to be trading liquidity. So this one is the ranging liquidity. This is the ranging liquidity. So the spelling of liquidity is wrong. So that's the ranging liquidity. So we take it back to 12. So that's the ranging liquidity. So that is the ranging liquidity. So let me increase the font here, because I think some of us have issues with eyes. So that is the ranging liquidity. So it is basically looking at the support and resistance areas. So this is how I've told you how these people are trying to do it. So they first come liquidate these highs, take you out, then the market moves in the intended what direction. So these were early sellers, so they were first liquidated. This is a stop hunt or a turtle swoop. So a Judas swing. So I'll be taking you through much of the Judas swings in the future. I'll be creating videos on the Judas swing. But now let me just continue looking at liquidity. So that's our ranging liquidity. So we have the trendline liquidity. Here we are looking at, sorry, just because my own space is small. So we have the trendline liquidity, and we say we are bullish, creating a series of equal higher highs and higher lows, like here. So this is how a trend line looks like. So how do these retail traders, they have been trained that every time the market taps this line, for example, the first time it tapped here, the second time, so the third time here, this is our third time. So they tell them, please, you are going to buy at this area, buy, put your stop loss below this low, then you put your take profit above here. So what happens is the market, it tends to come, and like I told you, the intention is yes to be bullish, but what they do is they first take out this liquidity, this trend line, people who are selling there, then the market moves in that direction. So that one is one of the most painful things in the market, when the market takes you out and ends up moving in the direction which we are anticipating at a certain point of time. So that is our trend line liquidity. That's what happens. So if you've been trying to put here on the third touch, so what happens, the market first comes and liquidates you, then moves in the intended what liquidity. So the time-based liquidity, basically we shall be looking at the previous daily highs and previous daily lows. So that is something I'll go into later, but what I can say that we can have a range, the Asian range. For example, we are bearish, so we create the equal highs, equal lows. So what happens is, because we are bearish, we want, sometimes we have early sellers here. So what happens is the market comes, triggers them, it comes, takes them out. It first gives you a fake move that it is moving, it takes you out, takes out the highs, later moves down. So let me call this one the Asian range. Let me mark it using a box, call it the Asian what? The Asian range. Okay, let me write in the, let me write the Asian range. Okay, the Asian range, the Asian range. So this is the Asian range. Let me increase the font to 20. So that's the Asian range. The Asian range, let me put it on top for now. That's the Asian range, looking at equal highs and equal lows. So what happens is they first gave us a fake move here. We entered for sales. We put our stops here. So the market makers, what they do is they first come, liquidate, then move in the intended what direction. Like I told you, we are bearish. For example, maybe the market has been coming from this, sorry, we are bearish, okay, like that. So we are bearish, breaking structure, the downside. So that's how we are going to be trading the trend line, sorry, the time based what. It's very important when I'm teaching the quarterly theory. In the future, I'm going to make a video on the quarterly theory, teach you how we use the time-based liquidity, that is the previous daily high, maybe the essential liquidity, that is the previous, maybe London high, low, Asian highs, Asian lows, even the New York AM, PM highs and lows. How can we trade that in case we liquidate? So so this one will also come in that part of the power of 3, so which is going to be something very important. So guys, allow me go deep, dive deep into the video, show you how can we spot out this liquidity. Though I've not talked about, like I told you, on above we are presenting the buy side. For example, above these equal highs, okay, are presenting buy side liquidity or buy stops. Okay, now the down, the sell side down here is presented by the equal, that's the sell side liquidity. So it is also represented by, it's also represented by what? Sorry, let me change this one to this, by this. So that is the buy side and the sell side. Okay, that is the liquidity. So we are going to be looking at the internal range and external range later. Maybe I'll create a video for that. If I don't talk about it in this video, I'll create a video basically talking about the internal range liquidity and external range liquidity. Like I told you, the external range liquidity is going to be basically looking at the external, maybe the old highs and old lows. Then the internal range is going to be looking at the fair value gaps. Okay, I think we shall tackle that later if time allows. So as we move, we are going to be going to our live charts and looking at this, but I've already taken you through these types of liquidity. We can have the equal highs, equal lows. So I think I talked about the old highs, old lows. These ones I told you, basically these ones can either be, we can either look at maybe we are in an uptrend. Okay, so these swing points maybe this high and this low are representing liquidity. This one is representing the buy side, this one is representing the sell side. When you go back to our picture, like I told you, like I showed you here, sorry, you saw the upper part here, these points in the market, this point, this touch, second touch, third touch, those are triple or quad double tops. These are equal highs representing buy side liquidity. Then we had this low down here, which is representing the sell side. Okay, every time the liquidity below, it is represented by the sell stops and the buy stops. The upper one is presented by the buy stops and the buy side liquidity. The down one is the sell stops and the sell side liquidity. So let's just go back and look at this. So these are all the highs, all lows, or all lows. So that's also another liquidity. Now let us go to the charts, identify the equal highs and the equal lows. Then later I'm going to talk about the internal range and external range. Later, take you through how can we trade using these concepts. If you have spotted your external range liquidity, maybe you've spotted your buy side liquidity, how can we enter the market using that? So let me first go down here, take you through how can we spot our equal highs. Let me first start with the equal highs, then I'll go to the ranging, or that is the like I told you, this one, the ranging is basically looking at the support and resistance, the trend line liquidity. So I'll look at the Asian range, which is basically looking at the session liquidity, which is basically looking at the Asian range, which is represented by the highs and lows. So the highs and lows can be presented by buy stops. The highs are for buy stops and buy side liquidity. Either you can, the sell side can either be called the sell side liquidity or the sell stop. So let's just look at the equal highs in the market. For example, here we have this. So sometimes some traders would call it relative equal highs, because sometimes they are not equal, they are relatively what? Equal. So when you find someone saying relative equal highs, which is also correct. So these ones are our equal what? Equal H. Okay, so it should be on top and should be in the middle. Okay, so that is the equal highs. So below we shall see the lows. Let me just make a copy of this. I overtalk, guys, I don't know, it's a problem. So you will see how they purged through these lows here, equal lows, relative equal lows. So let me change this one to lows. Let me put an S here. So these are equal lows, so this one should be bottom. That is okay. So these ones are equal highs. So that is how we can spot them in the market. Now what happened here, you see how the market was basically, when you look at the order flow, it was bearish. What was the intention of the market makers? First and foremost, they first let in the buyers. So the sellers first, early sellers entered from here. Let me say they entered here. Sorry, they entered here. They put their stops maybe above here. So they induced them. It was a fake out. So they were targeting here, which worked in the first place. But what happened next? Okay, maybe they were not intending to take out that. They normally put their they take profits looking at maybe someone is looking at this low here as their next area, as their next target, that area there. So what happened is they were liquidated. Okay, you see, their stops were taken out, or maybe these people entered early. So let me say they entered from where? When they had these equal highs, they knew when the market taps again here, they would sell. Then they normally want to put their stops maybe above this high here. So what happens? They are liquidated. You see that fake move. So that's how we can spot that one out. Let us have more examples. I don't want to make this video to be so lengthy, but let me just spot more equal highs. So we have this part here. These are equal highs. When you see they purged, you see, took them out. Those are equal highs. Did we have equal lows? No, we didn't have here equal lows. someone would have this one as a low, this one here. So what happened? We had this low being taken out also. Then the market also came and took out these double tops. Okay, because we have this touch, we have this touch, and this touch. So those are areas whereby these people are going to enter, thinking that the market is moving lower. So what happens? They tend to put their stop losses, tight stop losses. The retail traders, tight. What happened? You see what happened? They were liquidated. The market again reversed, came back and took them out. But now for us, the smart money concept traders, we want to first see this purge. So the moment we see this purge, when the liquidity is being purged at this point, then for us this is our good area for our entries. Now we drop the lower time frames for good entries, for reversal entries. Like I told you, we are taking advantage of these reversals. Okay, advantage of these reversals. So for us, we would have gotten an entry and then enter around this area, then move with the market in the intended direction. Already it had given you a shift in the market here. So what do you think? It was retracing back. So in the retracement, it liquidated these highs, because you remember we have our old highs and old lows as our PDRA, one of the 7 PDRAs. So so they came out, took out that, then we would get involved around here, then move in the intended direction with the market or the big banks. So that's how we can spot out the equal highs and equal lows. So let us look at the trend line liquidity. For example, we have an example around here. So this is a trend line liquidity. So let me name it trend line liquidity. So that is another area here where these retail traders tend to take their buys. So someone will say, this is a good trend line, guys. First touch, second touch. So in the third touch here, they want to enter on the third touch. That's how they've taught them. So when you see the market respecting that line, so you are targeting this high, so you can put your stop below this previous low and wait. You see what happened? They had to cut through their stop losses. So that's how hard it is in the market. So I'm going to be teaching you how not to get such kind of issues in the market, not to be easily liquidated in the market, because if you can't spot the liquidity, you're the liquidity. Let us look at another example on the trend line liquidity. For example, let me have this copy of this. So for example, we have this one already. It is being formulated here. So we have this liquidity here, this trend line here. See that? So we expect price to cut through to the downside. So that's another area of liquidity. So we have our equal highs, equal lows, where I think we have already gone through that. The trend line, we have also seen the trend line liquidity, how it looks. We can also have something to do with, again, we can have these ones, these equal highs here, also presenting some good areas of what? This is some good area of buy side or buy stops. So what happened? The market came, purged through. Remember, even here, we had this low here. When we took out the low, which was representing the sell the sell stops. So what happened? The market had to push to the intended direction. So they had intentions of taking the market higher. So what would be your target? These highs. So when they purge these ones, you look for entries around here. Then you move with the market. I will be showing you how basically you can enter the market using that. Looking at the other forms of liquidity, I think I've talked about the ranging. So for the ranging, I would say I could take this example here. You see this area here? This is an area of support and resistance. So this is an area of a ranging market. So this is the upper part represents resistance, the downer part represents support. So the support and resistance traders would wish to trade this. So maybe we had, for example, let me just use here. Okay, so we had this fake out. This one is a fake out, like I told you in the beginning. We have these fake outs or stop hands. So we stopped out, faking them out that the market is going higher. What happened? The market gave them that false move inside. Okay. In fact, this one was faking out people that we are selling. Later, these people had intentions of pushing market higher. So what were they looking for? They had to look at this internal range here. So when we took out these, did we take them out? Let me just have a straight line, maybe. I think we created more liquidity here. I think we just cleared. So it was, I think we didn't clear. Maybe they were coming back to this order block here. Even we didn't tap the order block. So, but the whole thing here, it was a false move. But what is the intention here is to fake out the sellers. They faked out the sellers. Later they had the intentions of buying, and later where they were targeting these people who these buy stops above here, because they told you those ones or buy stops or the buy side liquidity. So they said the downer part is going to be presenting to us the sell side liquidity or the sell stops. So every time the market comes, so they are intending the market would move like this, but what happened is they gave them a fake move, then the market had to these fake moves, and I'm going to be teaching you how best can you run away from such kind of what. That one can be the sell side liquidity, or it can be our sell stops. I told you sell side and the sell stops present the same. They are defining the sell side what liquidity, where where the buy stops, so where the sell stops can be, where they are placed in the market by the retail what trader. So we are going to be diving deep. So that one is our support and resistance, or the ranging liquidity. Then we have lastly what they call maybe the Asian range liquidity. I'm going to use an indicator to bring out that one very nice to you guys. But when you talk about the old high, the old low, what I would say is, for example, when we are presenting that, we are going to be looking at structure, looking at a break of structure. For example, let me give you an example here. So we had this high, we have this high that puts in this low, then this low are pushed out to put in this this high. Now you see what happened is we took out this external range, but when we took out the external range, what happened? I said we always get a reversal. So when you talk about when we broke structure here, let me say we had a break of structure to the upside. So what do you anticipate? I told you every time we take out the old high, this one's an old high. So what you anticipate is a reversal. So for us, we take advantage of these reversals. What are we reversing? We are coming back because we are going to be trading using our PP2. So I've not talked about the premium and discount, but liquidity, guys, I did this one in my mentorship, whereby I'm going to be using my premium and discount tool, that is the Fibonacci. How do I use the Fibonacci to spot out my premium and discount in terms of liquidity? Okay, so sometimes I would want to buy, because if I'm trading this one as a concept, as a strategy, sorry, I'm going to be looking for liquidity in the discount area. If I'm buying, for example, here, if I wanted to take the buys, this was the low. So what was the liquidity here? This one, the liquidity below the 50%. So that one is in the discount area, because here we are going to be looking at the equilibrium. The red line is representing the equilibrium. The upper part is representing the premium side. This one, the downer side, is representing the discount side. So that one, those on the sell stops. So I would wait for these sell stops to be what? To be cleared, for example. Then when I get a reversal, I would buy. What would be my next target? It would be this high. Okay, because this is an old high. I told you old highs and old lows are presenting liquidity altogether. For example, when we talk about the session liquidity, the time-based liquidity, here we shall be looking at, like I told you, I'm going to be looking at basically the previous daily highs, the session highs. The session I'll be talking about the Asian, London, New York, AM and PM. Those are the 4 sessions we trade every single day. Here, I think, guys, I have really given you some good examples on liquidity. So allow me take you through how can we trade the liquidity. For example, today on gold, I was liquidated. Later, I got the move and entered again. So when you get liquidated, you know, yes, today I'm the liquidity, but still you don't sit down, because you already know the move where the market makers are doing what. Because when you spot it, I spotted that, yeah, there was some equal lows below, and below them there was an internal range what liquidity, which was a fair value gap on the 5 minutes. That's where I was supposed to take the trade. I think I didn't see that, and that's why I was liquidated. Maybe if I saw that, I wouldn't have been liquidated. So those are simple things we normally intend to overlook, but they cause a lot of harm to our accounts. Yes, but so this is my Fibonacci presenting the premium and discount area. So like I told you, we are going to be trading, in case we are trading these reversals, we want to take out sales in the premium. So this liquidity should be in the premium side so that we can take out the reversals properly, and this one should be in the discount side if we are to buy. So I want to go through so much in the premium and discount when we are trading this. That one is I teach in my mentorship. If you want mentorship, please, you can, I'm going to put my phone numbers in the description below. You can inbox me, or either you can get me from our WhatsApp group, because the link is going to be linked here in the WhatsApp, in the description below, for you to see how, for example, for you to get me, and I take you through my trading strategy and which is working, and I've taught very many people and they are using it, and I'm also still using it as strategy. So let me lastly look at the time-based liquidity. Then after that, I'll be looking at the internal range and external range liquidity. So allow me go here. First start with the previous monthly high. So I'm going to select another chart. Let me look for another provider. That is, and I'm not using Rwanda. Let me use FXM. Now I'm using other provider. Let me first clean out everything here. Now, for example, I'm going to go to the monthly, because we are looking at the time-based liquidity. Because I remember here in my PDF, I told you that we have what they call the time-based liquidity, which is looking at the session liquidity, previous daily lows, previous daily highs, the previous month weekly highs and lows, and previous monthly highs and lows. So that's something I wanted to show you here. You are going to see. So this is our previous monthly, because this is our monthly chart. Basically, we are looking at each candle here is presenting a month. So today, this month is Feb, and you can see here it is Feb here. So indicating that we have our previous monthly high. Let me use this magnet so that you can tag us properly here. So that is our previous monthly high. This one is our previous monthly low. Okay, so let me name them here. PMH. Okay, let me just have PMH. Okay, let me put it on top, put it on the right. Okay, now let me first PML, let me put it on the right, then bottom. Good. Now that is our previous monthly high, and this is a monthly chart, as you can see here, indicating that we are on a monthly chart. That is the time based. So what are we anticipating this month? We would want to see price take out this previous monthly high or the monthly low. But me, this pair is basically looking for the high. Maybe if we take out these highs, if we take out the high from here, then we can see the market push lower to take out even the lows. Maybe come back in, then push lower, because when you look at this structure, it looks bullish, but to me, we have a change of character somewhere here, indicating that the market is pushing lower. Now that is how we can spot out our previous monthly high. So that those areas, this is an area of liquidity, and this one, so that is the time-based liquidity. So let us go to the previous weekly what. So now we have our previous week, that is last week, which opened here. So we are going to mark out this high and the low of the week. Previous monthly or previous monthly high, sorry, weekly high, previous weekly high. This is low, sorry. Previous weekly low, previous weekly high. So that is it here. Let me have this one on top. Okay, now that is our previous weekly high. So what are we looking for this week? As we see, it's showing some kind of bearishness. Maybe it wants to take out the low, maybe the high later. We don't know, because the week has just, because today is a Tuesday, we don't know where next the market is. So we trade looking at these. When you look at the fundamentals, they also do a very big part in moving the market. So they also help us to see our next drawn liquidity, because if you can't see that, so I don't know here, if we anticipate very well, we would see that the market is going to be taking out the previous weekly what, or maybe it can even go for the previous monthly low. Let us go and look at the previous daily low in this week. So yesterday we had this market put in this high. That's our previous weekly high, previous daily high, sorry. Then we have our low here. You see that? Today we have taken out the low. It's a very serious concept, guys. Previously daily low, so which is top, bottom. Now good, that is it. So we have our previous, so as you see where we have come from, looking at the previous monthly high, previous weekly high, previously previous daily high, and previous daily low. Now even you can go and look at the high of the day, the low of the day. I normally tell my student that the London session puts in the high and low of the day. So let me just dive deep down looking at today, because today you see what happened when you took out this liquidity. The market had to reverse. Okay, when you drop to a lower time frame like the 30 minutes, you see that reversal properly. You see that? So the moment we liquidated these lows here, we got a reversal and we got a very good change of character inside here, where you would enter for buys and then buy. Okay, so for some small time, maybe we are, because I remember I told you that the market is moving in and out. It is looking for external range, going for internal. So a previous daily low was our external range. Now we would go and look for internal range. We have these, first remove the magnet, we have these equal highs. Okay, that is the buy side. Okay, it's something you target, the buy stops above here. So what is above the buy stops? We have the internal range, which is our fair value gap, this CB here. Okay, this CB here, that is our liquidity. Let me change the color for it to be somehow. Okay, now that is the sell side liquidity. That is the bearish fair value gap. So we anticipate price to come clean out these equal highs, the buy stops, tap here, give us a confirmation, then target these lows for our liquidity, our next draw on liquidity. So we are going to be trading, looking, because here I told you in my explanation here, in my research, I told you that the moment training your eyes to spot where the price is mostly to purge liquidity is a necessary part, and in this way, especially when trading the trend reversals opportunities altogether. Now when you come back here, so we are training our eyes to see where is the market going to purge next. These buy stops here, these equal highs, if you spot those ones, that's why the market is going next to purge, to take out, for example, to come and clean out, give you a confirmation, enter, sell. What are you looking at? Where are these people looking for now? They are looking for these lows, this low here, this sell side liquidity, or these sell stops. We have that one. We have this one here, this sell stops here also. We have long term, we have this monthly lows, which is also liquidity. We have these ones here, these equal lows here, that's all liquidity. So maybe that one could be our next move. Okay, if maybe the market would want to continue higher, it would want to take out the previous daily high again, the weekly high and the monthly high, and continue higher, the vice versa. That is something we need to train ourselves. Can we spot this liquidity? And don't trade liquidity when you're not using the premium and discount. We have to spot this using you can't sell if this part, because when here you're going to be looking at your structure, that is the directional bias. Because for me basically, I'm seeing this one as a bullish structure. So what should be your next drawn liquidity? Maybe I would wish to see price take out the lows. Let me use the Fibonacci, for example, from this low to this high. So what would be my area? So you see below this one, we had this previous daily low as our liquidity. When we took out this, we are buying. Again, we are reacting within this this 30-minute fair value gap. As you can see, this fair value gap, this here. So we have respected the consequent encroachment of this. So we are seeing price trying to push higher. So what would be our next draw liquidity? This highs, this fair value gap, and this previous daily high. Okay, so that is how we can trade liquidity here, and that's how we are trading liquidity every single day. Let us have another example here. I think I've been spotting for you the internal range and external range. Looking at the time-based liquidity. Now let us go on the lower time frame. Now let me first remove this Fibonacci. So let us have this. When you look properly here, let me zoom in. I'm going to use an indicator die for the sessions. I use this one die, but I have another one I use for this one, the session, but I don't want to set this one. This one is automatic. Let me just spot it for you quickly. Let the indicator load first. Then these are the 4 sessions. Okay, these are the 4. This from here to here, that is a full day. Okay, now what was in this? Because remember our previous day, this was the Monday yesterday, we had a consolidation. We had a market presenting us these equal highs and equal lows. So what happens, like today we are supposed to take out this, we took out these lows. So what do you anticipate? Price is manipulating. So tomorrow you might see the market moving higher. And another thing, we are respecting our bullish structure. As you can see, the market is breaking structure highs. For example, we have come from this low. Let me say we have put in this high. We have put in this high, putting in this low, putting in this new high, putting in this low. As we continue, you see market putting in this high. So it is breaking structure, moving to the upside. So I'll also make out a video on market structure. I don't know when, but I'm going to be making many videos. I'm also making out a video now. I'm going to be uploading it. Also looking at risk management. How can you grow a $20 account to a $500 account, $500 using proper risk management? I'm going to be sharing information. I've tested this and it has worked out. I used this one in the previous month. I got my $500 using the $20. It was very easy to pass when we have a systematic way of how we are entering the market and how are we using our technical or mechanical based rules or the golden rules entering the market, our lot size, our position, our risk to reward, which is very key in this market to enter the market. So when we are growing the account, so I'll make that video. I think it's the next one after this one. So that is our liquidity. So as we are respecting structure in the bullish way, so what we anticipate is when you look at this, we had this range here, this equal is equal. So we took them out on Tuesday. So Wednesday, tomorrow it is Wednesday, which is here. This is our Wednesday tomorrow. So I anticipate price would come, take out this external range. First take out this, buy stops, even take out the previous day high, then continue, take out even the previous weekly high. So which is very, very key when we are trading liquidity. So we shall be looking at this. So I think the liquidity for today, we had our sessions. That's why I'm here. We had this one here, this first area here. This is our Asian. So we had the Asian range. We can mark it out like this. So the market didn't take out this, but it took out, didn't take out the lows. Let me put it in the gray color. It took out the lows. Later, the London kicked in from here. Now, what happened in the London? The London came, took out the highs, the Asian highs from here. Let me mark it properly for you guys. Now, this is our London session. Now, let me mark this one in some this color. Now, you see what? This one was our Asian range. We took out the Asian range. The London took out the Asian range, making the high of the day. No, later now we see the New York came in. AM took out this. As you can see, currently we're in the New York AM. So this indicator is called the die. It is here die quarterly theory. indicator, you can get it and use it if you know how to use the quarterly theory. So as you can see, I'm basically looking at the session liquidity, okay? Looking at the previous, because this one is our previous Asian. This one is our Asian high. Asian highs. Top, okay, Asian highs. So below we have, let me make a copy of this. Below we have the Asian lows. That's the 10 base. That's the 10 base liquidity. Sorry, I did mark out there. This one should be bottom, and rename this one as Asian what? Asian low. So you see what the market did when we took out the Asian highs. The market had to reverse, at least gave us a reversal somewhere. As you see, these were the lows, the highs. Sorry, when we took out the lows, when we liquidated the high, you see the market came back inside for some. I don't know how many pips it gave us. Let me see how many pips were these. You'd have entered from the highs here, but you enter with confirmation, guys. So this is like 30 plus pips. These are 34 pips. Okay, so let me take you through this area, show you how best you would have entered this market today using debt liquidation of the Asian highs when they landed and took out the what? The highs. So let me go to the 1 minute. Let me reset this. I want to take you through the 1 minute, show you how you would have entered after they had taken out the Asian what? The Asian highs. So these were our Asian highs. So let me zoom. Let me zoom in around this area. This is where we're supposed to enter from. Around this area, let me circle the area so that you can see properly how I'm going to be entering this. So what we do is okay. Oh my God. Sorry. I want to select this too. Now let me zoom out. Hope you can see properly here, guys. Now we have this high. For example, we had this high. We cleared those highs. Later we put in a new high. It was also cleared. That is now purging through the Asian range. So what happened is the market we are now going to be looking at structure, because you're going to be looking at this high, putting in the low. This low puts in this high. But this high, we don't count the high until when we see a break of what? A break of structure. That's when we can count the high. So this is when we had a break of structure around here. So this one. So we are going to say that this is our high. Then this high puts in which low? Okay, we would say this is the low now. For example, this is the low that puts in now again this. So this low puts in this high. Then this high maybe put in this low. Okay, let me just be clear here. For example, we took out these highs. We swept again the highs. So when we sweep these highs, we are going to be looking at the low. This one here. So this is where we had the sweep, whereby we cleared and we had a market structure what? Market structure shift. Okay, so after that, how would we get involved in the market? So like for example, I told you we are going to be looking at our previous high and look at our low. So that is how we are going to be looking. So that's how we are going to be entering the market basically. So you would have entered from here. So we can use our fib tool. So we can use here, we would have used our optimal trade entry around there, though it didn't work out. So what happened, this price was supposed to come back. We would have taken a trade within this area. For example, let me first remove this area. So we wouldn't have taken an optimal trade entry because price didn't retrace back to that area. So what did it give to us? It had left behind a fair value gap. This is the gap here, which is a CB. Let me mark it in green so that we can look at it properly. So that's CB. So that's why we're supposed to get involved in. And what would be our closest target here? So you'd have entered from here. Then we came and we would have targeted these lows for our take profit. Okay, but what happened is price didn't reach there. So we are moving from liquidity to what? To liquidity. Okay, so the market is now, we have taken out the Asian range. Maybe we would have even targeted the Asian what? The Asian lows as our as our next draw on liquidity. Though I didn't zoom out properly, I think here the market had taken out even the Asian what? The London had taken out the lows from here. Yeah, they had purged through them. The lows here. So here, yeah. You see that? Even here you would have taken a buy, get a good confirmation, buy, targeting the Asian what? Asian high. So that is how we can trade liquidity. And every time we take out, let me go back to the 3 minutes. Maybe we can have a clear look at this. Okay, I marked out my range properly because I was on a high time frame there. So this is our London. So we purged, we took out the Asian lows from here. So you would have entered buys from here first, because remember it is realigning with our structure. Because remember we are bullish, we would want to first see the Asian lows being taken out before the highs being what? Taken out. So this one also would be another entry, though it was short term. Maybe here you would have targeted a fair value gap, maybe targeted this one as our next area. So you would target the consequent encroachment as your take profit. You would have taken your 20 pips from there. Then your stop loss, you can even have a tight one below this low here, like 7 pips, and targeting having a good risk to reward, like of 1 to 3 risk to reward. So this would be your next target. But before, you would have taken the buys, because this one was aligning with our structure. That is our time base. That's something I'm trading every single day, the Asian range. Okay, every time we take out any side of the market, I want to look for buys or sells, depending on what has been taken out first. So let us circle that one out and see if we could have taken an entry from that area too, if we are to buy. So how would we get involved here? So first and foremost, the market swept out this low. Okay, so that was a sweep. Now when we sweep that, we'd wait for following structure, the low, high. Now we put in this low, so we had a shift around here. So this was our market structure shift from here. Now that one is for the conservative one. Someone else would have taken a shift from here. Okay, a shift from where? From there. But you wouldn't have taken this one because we had not yet taken out the Asian one. The Asian, you're going to be liquidated. So you would wait for price to come back, and maybe, I don't know if it came back for sure. Let me see if we targeted here. So you'd go to the 3 minutes if you don't see anything here that is aligning properly. So you'd see the market came back still to this fair value gap here. You'd have entered from this fair value gap, this BC here, the buy side sell side imbalance. Let me change the color here. So you'd have entered from that area here. That is on this pair today if you are traded the Asian range. So that's where you're supposed to enter from, this fair value gap. And what would be your next target? It would be the other Asian what? Asian highs as your take profit. So you put here, maybe you can put your stop loss below this low here. Some other traders would put it below this one. That one is too tight because of the spreads here. Someone would put it even below here, 10 pips below that low, the body of that candle. Now what would be your next target? It would be this Asian what? Asian highs. So what is our risk reward here? It is a 1 to 4, which is a very nice one. So so guys, that's how you can trade liquidity every single day. I would take you to another one, but this is the time-based liquidity. That's how we can trade the Asian highs and Asian lows. I think this thing is becoming too lengthy, so I think I've given you a straight example how best you could have entered this market using the Asian range liquidity. So I don't want to go back to the previous day, previous week, and previous what, but I've just basically looked at this week, taking out liquidity. So today we took out the buy side still on the same pair. So what happened here? We took out both the previous daily high, the previous daily low, and the previous daily low, and our Asian low liquidity, which was a good trade for the day. So this is a 1 to 3, the 1 to 4, which is even too much for me. Now I normally take 1 to 3. That's my trade. So it was a perfect one for today if you had have taken the trade on this, basing on the Asian range, whereby the London took out the loss. Then we got a confirmation change of character here, a shift. Then we would have entered from here. then you target there this buy side liquidity, which is the Asian high. Then maybe which one would be the other target, the previous daily previous daily high, or this buy stop, sorry, this buy stops above here, this one would be your next target. Again, maybe these highs here, these highs here, all those ones are areas of liquidity, those equal highs and equal lows. So guys, allow me, I think I've over talked with those simple examples I've given you. Maybe I can give you one more example, then I call it a day. So that's how we are trading every single day, the sell side. For example, today I told you I'm going to take you through the Euro USD trade I took today. Let me look for Euro USD, Euro USD. Let me use fx.com. Now, still, I'm going to use the daily time frame first. Mark out my previous, let me first clean out the chart. I'm going to mark out my previous daily high and my previous daily low. Structure wise, when you look at this structure, it tends to be bearish. Why? Is you can see we have been moving from here, here, here. We have come here, here, now here. Basically, when you look inside here, you would see the market is trying to disrespect this low, though we have not taken out the low. But when you go to the 4 hours, you will see we have a shift inside here. This was the shift, indicating that we are going what? Going bearish. But currently we are still looking bullish, but we are bearish. But if I take you through the weekly time frame, you see it is so bearish. As you can see, we have sell candles here. So what is our next liquidity to be taken out is that. So allow me, I'll take you through the today's trade. I'll basically be looking at it. Let me first clean out this. Good. Now I'm going to go back to our daily time frame, look at our previous daily high and previous daily low, looking at the time-based liquidity, because remember we are bearish. So I've not taken you through so much here about liquidity, but I'm going to make some other small video basically looking at the drawn liquidity, internal range and external range liquidity, so that you can understand how we can trade that. So I don't have that's the previous PHD, previous day PDH, previous daily high. Okay, now as we come down, we have our previous daily low, which is our other part of liquidity. Now, how do we trade this? How were we supposed to trade this today? So this is how we took out the trade. Here the silver bullet, using now the session-based liquidity. So we dropped to a lower time frame, that is we dropped to the 30 minutes. So on the 30 minutes, what do you see on the 30 minutes? We see liquidity. We had these equal, the double tops here, these double tops here. Okay, but let me first mark out our sessions. This session, this is the full day. Let me mark out the full day first. Now inside the full day, we have these small tubes of hours indicating the sessions. The first one is the Asian, London, New York AM, then the PM is the last one. Basically looking at this, let me drop the 15 minutes. We can have the ranges properly. Now looking at the session liquidity, I like that. I'm going to be using the previous daily high and previous daily low as my drawn liquidity, or what is my next area to be purged, or the liquidity to be purged next. That would be my previous daily low. Because we are bearish, I would anticipate price to take out the previous daily daily lows. And what do I need to see first? I want to first see the Asian highs being taken out by the London to get that good move. Like today, this is how we traded. Now this one was our range, previous range. Now this is our Asian session. Now we had this range here. Let me just use the gray color. So that is our Asian range, Asian high and low. So what happened? We had our London do the manipulation. Okay, the work of the London session is the manipulation. So I'm going to do more videos, guys, basically looking at the power of 3, looking at this quarterly theory, how I'm using it every single day. So what happened here? We took out the Asian highs, and we had this other buy side, or the buy stops above here, which we anticipated that price, when it takes out that, we would see a reversal. So I dropped to the 1 minute. Okay, now this was our Asian range. I dropped the 1 minute. Now I call it the kill zone. Okay, this is I'm using the New York time here, UTC minus what, -5. That's what I'm using for my time. Now you see here, let me first use my gun box. Okay, mark out the gun box because I want to get the silver bullet, because this thing has already shifted to the New York AM. Because now first we had this first range, guys. I don't want to go through the whole strategy, because now I'm bringing out the whole strategy, how I trade it. But it's just because for educational purposes, because this one is just for educational purposes, guys. Just educational purposes. I'm not here as a financial advisor or intend to do anything, but I'm just here to teach you how to trade or use this concept as. So this is how I use the concept, the liquidity concept, for my entries. Now this is our silver bullet time. So this is our kill zone. So this one is our kill zone here. Kill zone. The kill zone. Okay, that is our kill zone. Now in the kill zone, we are supposed to take a trade in the kill zone here. So I drop to the 1 minute. Let me first go to the 3 minutes. I want to see something. There's something I see. Now we go to the 1 minute. I want to show you how I took all the cells around here. So when you follow structure properly, you see where is our kill zone? Sorry. Now this is our kill zone. Let me just mark it properly. Okay, this is our kill zone. Let me show you here. So what happened? Now we had the market was moving high. You see, it came on, it broke structure here, showing us this turning to be bullish. Then we had a shift inside here. You see here. So after that, what are we looking for? We are looking for an entry around here. So we had our entry around that area there during our kill zone times, because now the market was showing us that it is bullish using this 1 minute time frame, but later we saw it making a shift inside here, as you can see here, a very clear shift. So this one's a market structure shift. Okay, now after the market structure shift, what happened next is we are entering from this area. Okay, this area has a fair value gap. This one here, this is a fair value gap. Basically here, this is a fair value gap. Okay, it's our CB. This is our CB here. So that CB, that's where we entered from. I shared this one in the group. So we had to put our stops. We put our stops. In fact, we normally don't have stage stop, because our brokers, I use XNS, is linked down here in the description below, so you can register with our broker. Though the spreads are not so tight, but they are good spreads. Is a good broker here in Uganda. I'm a Ugandan, guys. So what would be our target? Our target was the Asian lows. This is our buy side. Sorry, the sell side. Yeah, the sell side liquidity, the lows, and the sell side liquidity. So when we took out that one, those are the sell stops or the sell side liquidity. So that one was the 16 pips. So the ICT guy says, Michael says that it is always 15 pips, and that is it. So another target would be our previous daily lows, which have not yet been taken. So when you look here properly, so this is our previous daily low here. So we are still holding the trade even up to now. I'm still in this trade. We are targeting these previous daily lows. I think we have already even liquidated this. We have already taken out this. I think in the time I've been making, the trade is still moving on. So that is it. So we have already taken out the previous daily lows, and that's why the market is again reversing back inside. I told you, every time we take out liquidity, we get a reversal. There must be a reversal. If you're a reversal trader, please learn liquidity, dive deep into liquidity, learn the liquidity. So this was a beautiful trade we took here at Empire One FX. It was beautiful. Basically, we are looking at the time-based liquidity, looking at how our London is going to work out. It purged through the Asian, took out this all the highs, all equal highs. I see that's liquidity, all of it. So when we took out that and we had this one, we had an added advantage, and this is our kill zone. This is the kill zone here. Time we took the trade here, and it was perfect. So guys, I don't have much to talk about today. I have basically used the small knowledge I have about liquidity and how I trade liquidity and the type of liquidity I'm trading every single day. I'm looking at the time-based what liquidity. Though even the equal highs and equal lows, I'm using them. The ranges, I'm using them. The ranging market. So you see, these ones are equal lows, equal highs. I took advantage of that. Again, I'm taking out. Looking here, I've taken out this. Again, I'm looking for this. So we are going to purge. We purged through the previous daily. So it should be something. If you don't understand where the market is heading to next, you can't understand it, how we entered. So that's how we took out an A plus setup, which was a 1 to 5 risk to reward. So guys, thanks for watching. If you have any questions, you can comment below. I will be answering you. If you have any video, you feel like you have any challenges in ICT, SMC, man, bro, sister, please inbox. My number is going to be put in the description below here. Please subscribe if you're a new person. Guys, thanks for watching. See you in